Good morning, everybody. It is Wednesday. It's March. January, I am convinced, I was talking to my team about this. I'm convinced that January was the longest month ever in the history of time. And February was the shortest, which it is the shortest, I know, in the year, but it felt like January was like 95 days and February was like 10. So I'm still like, oh my gosh, it's March. It's actually beautiful outside. I feel the March energy. I'm feeling the spring vibes. Tell me where you are. Tell me what you're up to. Here, I'm going to move some things so that I can see you. Hello. So I know we had this scheduled. I think in the Facebook group, we accidentally had the schedule saying March 9th, but it is actually today that I am live. I'll be live next week with a different topic. I don't know what it's going to be yet, but I will tell you soon. So hope everybody's doing well. Tell me you're here. Tell me you can hear me, you can see me, and that everything's working. And then we will jump on in and get started. Today, we're going to talk about taxes. We're going to talk about what they don't talk about when it comes to taxes. And by they, I mean accountants, CPAs, people who are professionals in taxes. We're going to talk about a few things that they don't necessarily tell you. So for anybody else who, is hearing Encanto 100 times a week in their household, I have a 8-year-old and as of yesterday, a 5-year-old. My daughter just turned 5. So this is like her favorite thing. She got a million Encanto things for her birthday, including a Mirabelle dress that we will be wearing when we go to Disney in about a week and a half. So I'm pretty jazzed. But just to start this off right, and I can only play a little bit of this because otherwise I think YouTube will kick me off. But just to start this off right, let's do this. We're going to talk about taxes. But best part of that song. But we're gonna have an entire song about it. Okay, cool. I see everybody. Awesome. So I see Christina and Danielle and Charlotte. Hi, Charlotte. April's in sunny Florida. I'm so jealous, but it is sunny here today. I will be in sunny Florida in like basically a week and a half. We're driving down to Disney this year for an entire week for spring break. So I am so excited about that. I think we're a Disney family. So we typically go every single year, or we did pre-pandemic. We are Disney Vacation Club members. Anybody else? Am I the only one? So we go every year, but it's been 2.5 years. So it's been since, fall of 2019. It was the last time that we went. And so my daughter doesn't even really remember it. My son does, but now he's tall enough to ride everything. So we are very excited for our trip to Disney World. I need the sunshine in my life. I need the fun, all the things. So if you guys have a trip coming up, let me know. That's the joy of spring break, right? And the joy of being an entrepreneur who can actually take a spring break, which is really amazing. Oh yeah, spring. Oh, I know. It's going to be bad. It's going to be rough. I'm ready for the rough. We are very good at planning though. There are 10 of us going. And so we are very good at all the different things, although they have a new like fast pass system. So that I'm a little unclear on how that's going to go, but we will figure it out. I'm sure we will always make the best of it. We know all the tips and tricks. If I wasn't doing this, I could totally have been a Disney vacation planner. I will just say that. Oh, good. It's so, I've never been to Disneyland. That's on my list. Oh, fun, Christina. That sounds awesome. That's been something I've wanted to do too. And Danielle, I know Danielle had an awesome trip to Jamaica, and I will tell you, I was super, super jealous of her the whole time that she was there. Oh, I'm going to be there. We might be coming home then. I don't know. Somewhere around then. Oh, that's Disneyland. Oh yeah, because you're in California. That would be a little bit of a hike to come all the way over to Florida. Well, it's going to be fun. Hopefully you guys have some fun and sun and things planned. I'm going to jump on in. Sorry for spending some time. I would just like to make sure that everybody who wants to join us live is here. And we're going to talk about taxes, right? We're going to talk about taxes, even though we don't talk about taxes. There are some, I won't call them secrets necessarily, but just some things that I feel like in this profession, we don't always talk about. We don't always tell small business owners things that would be useful probably to know, right? So I'm going to just talk about, I think I have four different kind of things that we don't talk about that are useful to know when it comes to taxes. We're sitting in March, right? Tax deadline, depending on what type of entity you are, you might have a tax deadline coming up super, super fast in the middle of March, or your tax deadline might be April for your personal taxes. Either way, there's a lot to talk about when it comes to taxes. So the first thing that I want to talk about is kind of this misunderstanding when it comes to taxes. And I'm specifically talking about income taxes here. We're not talking about sales taxes and all the other taxes, but specifically talking about income taxes. And I think this misconception comes from a place where we see a lot of news about, businesses and, high net worth individuals and things like that paying really low tax rates. And so we think there's something we're missing, right? Like we're like, what are we missing that we're like paying all this money in taxes? There's clearly like some kind of silver bullet out there. There's some kind of secret that we are missing that only they tell people. It's like when you hit, when you're a millionaire or a multimillionaire, or, when you hit $100 million, all of a sudden they're like, oh, hey, by the way, here are all these secret tax tips to save you money, right? Like we think that like, maybe how do we tap into this? Clearly like there's some crazy way to save all this money on taxes. And I will tell you that unfortunately, that's not the case. At least that's not the case for most of us. And the reason for that is because there's not really silver bullets. There are things, of course. I talk a lot about tax strategy, and we've talked about a lot of different types of tax strategy. But I think that we want it to be sexier than it is, if I'm being honest. Or like there's some like credit or like some thing behind the scenes. But often it's like super unsexy. It's like, the biggest way oftentimes when we talk about like tax strategy, it's like, money you're putting into retirement accounts or HSAs, right? Like that's a big tax strategy. It's being the right entity type, which will save you maybe thousands if you're the wrong entity type, but probably won't save you tens of thousands or more than that, right? So sometimes we think like it's going to save us all this, like we're going to get a truck backing up with all this extra taxes that we're going to save. And that's not really the case. It's often going to be things like timing, right? Your timing of your expenses. What year are your expenses hitting? What year is your income hitting? Things like that you can kind of, do some work around. It's going to be not missing deductions, but they're often not these like crazy hidden deductions necessarily. It's things like home office and, mileage, right? Like things that aren't exciting. And so, yeah. Well, Myrnie is a financial planner. She's on my preferred vendors list. So yes, money, but no, it's really not. It's really not, Myrnie. But it's important. It's important. It's not particularly sexy, right? Like what's sexy is going to take a trip to San Tropez. What is responsible is putting money in your retirement accounts, right? So that you don't have to work until you're 110. So I won't give you that. But I think that we think that there's a silver bullet. We think that there is some like special secret, like there's a secret handshake that if we know it, we're going to be able to save all this money on taxes. That's not to say tax strategy isn't important, but for most small business owners, right? If you're not making in the millions of dollars, it's somewhat limited to what can be done, right? And the smaller you are, the more limited it is. So why is it then? That's true. That's a fair point, Sherry. That's a fair point. For you, maybe it is, because that means you can actually retire and stop working. So I will give that to you. But I think that what we often see, like I said, is we see rich people. Let's be honest. We see people that we perceive as being rich or having a lot of money as being able to save a lot on taxes. We hear the stories of like Warren Buffett's tax rate being less than his secretaries. And we're like, what is going on here? And the truth of the matter is that the reason that that's the case is the more you make, right? The more money you have disposable, the more creative you can get, the more creative strategies open up. For example, estate planning, right? Estate planning for a lot of smaller people who don't have a huge estate and aren't going to be dealing with huge estate taxes when they die, right? For people with estate planning, like if you have a high net worth individual, like there's a lot you can do when it comes to estate planning, or even like charitable deductions and things like that. But when you don't have a ton of disposable cash to play with, it makes it harder to find avenues. What people do, what people who are have a lot of disposable income do is they put that income in other places that can kind of shield it from taxes. Well, if you need that income in your life, right, to pay your mortgage and your life expenses, like we can't necessarily take all that money and shield it in all these different ways. That's possible because they have a lot of extra money, so they can shield a lot of their money in these different plans. But if we need that money in our life, like we're probably going to have to pay taxes on it to get access to it, right? Think about taxes as almost like you pay taxes to have access to that cash. And so when we make decisions like putting money into, a SEP or something like that, we are saying, okay, I'm not going to pay taxes now, right? I'm not going to pay those taxes, and that's my benefit, but I pay by giving away my access. Now, do you still have access? Yes, but you would have to probably pay penalties. And obviously, if we put money into these retirement plans, the plan is not to take it out later. So I like to think of it as, what you're doing is you are getting a benefit for giving away access or at least immediate cash flow liquidity, right, to that money. But if you need that money, it's going to be really hard to find avenues to really save meaningfully on taxes. Okay. Now, there are still strategies that will help you save thousands, but if you're looking for that silver bullet that's going to like bring you down to a 5% tax rate or something like that, it's probably not something that exists. It's still worth it to talk to a tax strategist. It's definitely worth it still to talk to a financial advisor, right? And make sure you have your ducks in a row. But as you generate more cash, that's going to be when it opens up more and more opportunities. When you have cash you don't need in your life, right? That then opens up more opportunities. Real estate is another place that you can kind of shield some taxes sometimes if done right. So, right, there are a lot of those avenues that we can't maybe take advantage of as a small business owner, and that feels frustrating and it feels unfair. And I totally understand that feeling. Honestly, I totally understand that feeling. But the reason isn't necessarily, now we could debate this all day, but the reason isn't necessarily to give people who have like rich people, right? People that we perceive as rich, all these extra benefits above and beyond other people. It's just they have extra money to take advantage of the benefits that we don't yet have. Notice that I said yet. Let's see. I started it. I started it with it. I will also end with, I'm not going to sing it, but we can play it. I have to be careful. I can only play small snippets of songs or else they shut me down because of licensing. Okay. All right. So that's number one. There's not a silver bullet. Tax strategy isn't sexy. I apologize if you showed up here today wanting me to give you that silver bullet. I'm not going to do it, but I am going to tell you that. Still worth it to look up strategies, but you're not going to save $100,000 in taxes if you're only making $150,000, right? That's not a thing that exists, unfortunately. If someone does know that, send me a DM. Somebody has something up their sleeve that nobody else knows about. Do send me a DM. But I don't know of anything that falls into that realm. Okay. But do make sure to get a qualified tax preparer because they can help you with this. Okay. Let's see. So number two, let's see, which one did I have as number two? Okay. So let's talk about how tax preparers, so we just talked about this and how it is important to have a tax preparer who's helping you. But I don't want you to assume that tax preparers are automatically looking for ways for you to save money, at least not like proactively. They might be trying to make sure, okay, I get all the deductions, right? Because what a tax preparer, if you're hiring somebody once a year, I'm talking about those people, once a year to do your taxes. A lot of people assume that tax planning is built into that they're going to give you tips for the future. They're not. More than likely, they're not, unless they are unless that's already built into what you're paying for, right? Check what you're paying for, check your contract. What are they agreeing to? But typically tax prep is looking backwards. It's being a historian, right? And the people who are really good at that aren't necessarily as great as looking forward, or maybe they are, and you just have to pay them extra to be able to do that, right? Because typically by the time you get to prepare your tax returns, there's very little your tax preparer can really do other than they'll make sure they're getting you the credits. They'll make sure they're doing the deductions correctly. They'll make sure to ask you the questions, that they need to ask in order to get you those deductions, but they can't go back in time and change your entity type. They can't go back in time and hire your kid into your business. They can't go back in time. Well, they might be able to advise you to put money into a retirement account or something like that. But again, because of the time, you have a little bit of extra time to be able to donate to those after the end of the year. But most of the time, they can't go back in time and tell you to do anything last year. So what they are doing is prepping your tax return as it stands, right? Using the information that you give them, and then they're going to hand it over to you. And so I think that is one thing that when people find out, like they also remember how many tax returns that these companies are doing. Right? If you're paying a couple $100s to get your tax return done, they're probably doing hundreds, if not more of those, right? In a week. So they're not going to sit down unless you're paying them separately for that service. And that probably would come outside of tax preparation time anyway. That's probably something that would be later in the year. But unless you're actually paying them to do that work, they're not going to come to you with proactive advice necessarily, right? So I think that expectation needs to be said, that just because you're hiring a person to prepare your taxes, it does not mean that you're paying the lowest amount of taxes, or that you're getting that proactive advice to make changes to help you pay less taxes next year. Okay. So again, that may be the same person who also maybe offers a more tax planning and strategy type of session. It might be somebody else entirely that does that work. But you're probably going to pay more of a premium for it, right? Because tax preparation is a compliance, meaning you have to do it. It's required. It's a little bit formulaic, although there are some things, but like it's fairly formulaic in how you do it, especially if you're doing it by the book. But it's outside of that time where there's more flexibility to make decisions, to actually advise you on tax type things. Again, remembering there's no silver bullet. There's nothing that's just going to like make it so that you don't have to pay taxes at all. But that's just something to really be aware of as you're walking into relationships with your tax preparer, and make sure you have the communication. Ask them. Remember, not everybody does the same thing. So ask them, like if you ask them maybe, hey, let me know if you think like another entity type would be good while you're looking at this, or let me know if you have a package that covers kind of more proactive tax planning and whether you think I would be a good candidate. They can probably tell you that by looking at your tax return, whether you would be a good candidate to be able to help save taxes. Be a little wary if they quote you a very specific number. That's something that is told in the industry, to tell people, like looking at their tax return for 10 minutes, that they can save you $12,742 a year. They don't know that, right? Because your tax situation is constantly changing. So it doesn't mean that they may be able to make some tweaks. But anytime, a very specific number is quoted, I always have skepticism, because I'm like, okay, show me that. And then after the fact, show me how you did that. What would this have been had I not done these tax preparation things? I would not be a very good tax strategy client. I will be honest in saying that. But really, right? That's you do want to be looking proactively, and you just want to be communicating with your tax preparer if that's something that you're looking for. Okay. Hopefully that's helpful. Has anybody used a tax? Let me know in the comments if you've used a tax strategist, or if your tax preparer has done strategy or planning with you, what that looked like. I'm just curious to see. Okay, so that's two things they don't tell you about taxes. The third thing they don't tell you about taxes is, don't let the tail wag the dog. What does that mean? Okay. Taxes should never be the reason to do something. It's a consideration, but you don't do things because it's advantageous tax-wise to do so, right? You need to make decisions in your business that are best for your business, that are best for your business, that are best for the continuity of your business, right? That are best for having a sustainable business that can continue to run and is scalable. You never want to be making decisions based on solely the tax piece, or even that being the first consideration. I think this happens, like where we see this a lot, is people spending money maybe to get deductions because they're like, oh, it's deductions. And so they're spending that money, even though that's not the best decision for their business overall. Maybe they're getting a little bit of a tax break. Remember, it's not free money. It's just a little bit of a tax break. If you spend $100 and your tax rate is 25%, you'll get $25 back for that deduction on your taxes, but you still spent $75, right? So if it wasn't something that's helpful to grow your business, it's not something that you need to be doing. So I think that that's one of the places that that can show up, is making decisions based on the fact that something is a tax deduction. That should be the secondary consideration, not the primary. So that's something even in the corporate world we had a lot of discussions around, because finance in general, not even just taxes, but finance in general, right, was never, we were brought to the table once a decision was made that said, this is, but we think this is best for the business. Now we want to understand the tax consequences and the accounting consequences around this, and then help us structure this in the best way possible. Like we came in after the fact. We came in to say, okay, here's how we could do this well. This thing that's best for this initiative we want to do. All right, let's see how we can optimize this from a tax and accounting perspective. But it was never the primary. We weren't doing anything out in the marketplace, right? The company I worked for sold Coca-Cola. We were a Coca-Cola bottling company. They weren't out there spending money to get tax deductions, right? They were out there selling Coke, and what was best for the business and what was best for sales and customers and all of that. Then once they knew that and had the strategy, that's when we would always come to the table to help them figure out how to optimize it, make it better, watch out for kind of like tax things here and there that we need to watch out for. But that was never the deciding factor. So that's where I think it's really important. And the other reason for that, and specifically going to this issue of deductions and spending money to reduce taxes, right? Which none of y'all are doing, because you guys watch me here and you shouldn't do that, right? Money you spend in your business should be money that you're investing that will help you grow your business. If it's not, then it's not a great thing to do. And part of the reason, just to drive that home on a more personal level, right, on why does that not make as much sense? Well, if you have less profit, you can pay yourself less. But also, if you have less profit in your business, it makes it harder to get a mortgage. I can't tell you how many self-employed people took this route of trying to minimize their profit over time. And what happened is they then wanted to go get a mortgage, and they're like, well, I made $200,000 last year because that was their revenue. And the mortgage company's like, you made $20,000 last year because that's your profit, right? Because they wrote off $180,000 in deductions. And so that's really important. Now, that doesn't mean to not, like, if you actually have those deductions, you need to claim them, right? We don't hold them back. That's actually mortgage fraud. If you're holding back deductions that were really true deductions in your business, that were real true business expenses in order to inflate your profit, that's also not something you can do. But the point is, you want to be able to manage your business to have a healthy profit. That is super key. That is going to always benefit you. It's also going to help you with Social Security later in life, right? So it's hard to think about now, depending on where you're at. If you're closer to that, maybe it's easier. But, depending on where you're at, if you're in your 30s, it might be hard to think about like, oh, the impact that not having a lot of profit is going to have on my Social Security someday. But again, like if you ever want to retire, it's going to matter. So thinking about those things and not letting that be, So that's been in my courses too. And that, it's so important to think of things that way and to not let the tail wag the dog and not make decisions because it's a business deduction or anything like that. Make it because it's the best thing to do. Yes, tax strategy has to come early, not retroactive. Yes, very much so. Very much so. The earlier you do it, the better. And tax strategy is going to be something you're going to do over time as your business changes. Your strategy is going to change too. But anyway, so so the idea of making sure that you have a healthy profit, because that means that your business is healthy. That means you can pay yourself a healthy amount, right? That means that you can reinvest in your business if you want to. That means that you can take advantage of more of these the healthier your profit is, the more you can take advantage of some of these tax things that you can do to try to reduce your tax rate, like contributing to a retirement plan, etc. But you got to have enough profit to be able to do that, right? That should be the first and foremost thing as a business owner, other than impact. But you want to make sure that you have a healthy profit to make sure that your business can keep going. That doesn't mean profit's the most important thing. But your business will not run without a profit. You will give up on it. You will start to resent it, right? Your business will not grow if you cannot set up a business model that gives a healthy profit at the end of the day, right? Impact is exceedingly important. You want to make a difference in what you do, but that doesn't mean you give yourself away to do that, right? Unless you're a not-for-profit. And even in a not-for-profit, I still recommend that people who are involved in those are paying themselves a salary, right? That allows them to sustain, because otherwise they're going to give up on that as well. Okay. All right. And the last thing, let's talk about your tax liability. Okay. So if you're working with a tax preparer who is telling you how much to pay in estimated taxes every year, every quarter, right? So every quarter we're supposed to be paying estimated taxes as a small business owner. Some people wait until the end of the year, especially if you don't have a very high profit line. You might be okay doing that, or if you're early on in business. But as you're a more seasoned business owner, you're going to want to be paying estimated taxes. Estimated taxes are essentially the equivalent of the withholding taxes that they do for a paycheck, right? It's making sure that you're paying your income taxes, your payroll taxes, right? And withholding all of that throughout the year so that you don't have this huge amount that's due at the end of the year. That's really the goal. If you do end up having a huge amount at the end of the year, there are two things wrong with that. Number one, you have to make sure you have enough cash to then pay that. And a lot of times that cash is long gone, spent in all different kinds of ways, right? So you need to make sure you have enough cash. And then number two, you could have penalties and interest and things like that the IRS would assess on you. They're not like huge, but it can definitely add up, right? So you want to make sure that you're paying those estimated taxes if you have a fairly healthy profit line, or you want to make sure that you're doing something else. Like if you have a W-2 job, a regular salary job, or your spouse does, then you could increase withholdings for that job and maybe not pay estimated taxes. There are some strategies to do that. But overall, you want to make sure that your income as a business owner is being considered in the calculation of the taxes that are due, and that you are paying into that in some way throughout the year, right? Because that will make things a lot easier when it comes to the end of the year. So the thing they don't tell you. So what's the thing they don't tell you about this? If you're using a tax preparer to do this, more than likely, especially for the first 3 quarters of the year, at least, I would say, more than likely, they're probably using last year's information, right? Last year's actual business profit to be able to determine what you need to be paying in, okay, for those quarters. So if you think that they're being based on the current year's activity, you may be wrong, and you may want to qualify that, right? And the reason that accountants do this is because the rules around paying estimated taxes, basically you're not going to have interest and penalties as long as you pay in throughout the year at least 100% of what your last year's tax liability was. So a lot of times what they do is they take last year's tax liability, divide it by 4, and those are your payments, right? Those are the kind of the payments that you just make an equal payment of these 4 throughout the year. Now, if you have a seasonal business, that might be challenging. Let's say like Q1 is really tough for you, right? Then you may have less in Q1, more in Q2, right? But it's important to know that they're basing it on last year. And why that really matters. It may not matter if your business is pretty steady year over year. That comes into play. Where we see this is when businesses take off, right? Like you have a massive year of growth, and that can happen in business. We have had that happen. We've had 2 years that we doubled, 2 years in a row. So if I was only setting aside money or paying estimated taxes based on what I did last year, what my profit and revenue were last year, like I would get to the end of the year and be shocked at the amount of money that I have to pay. Right? Because I wouldn't have realized like, oh, that's not going to cover me this year. Right? And so that's really important to know. And then usually if you're working with a tax preparer year round, it's usually in the fourth quarter that they're able to have enough information to help you figure out how do we true this up? How do we get a little closer to what this year's information is going to be? Okay. So that's that Q4 is a really good time. September, October, November, really good time to sit down and make sure that kind of you're settled up. But if you've had if you know already, if it's March and you're like, this year, we are already on track to do way more than we did last year, you might want to be either increasing your estimated taxes. That's one thing you could do. Not necessarily what I recommend, or at least setting aside extra money. So I have a specific reserve where I put extra money, like I pay a certain amount for my estimated taxes. That's usually based on last year's. And then the extra, I put a good deal extra into another account so that I'm not spending it. And when I get to the end of the year, it's there. But I don't want to give the government my money and have them have a basically an interest-free loan. Some people like that though. Some people would prefer that and it makes it easier and they like to get the tax refund. For me, success for me is when I literally like we are within $100 of you owing me or me owing you, government. Like that's what I want. I don't want you holding my money. I don't want that refund because that means I just gave you a tax-free loan or an interest-free loan, right? And I also don't want to be paying a big chunk because I don't like that feels psychologically difficult too. So I like to kind of make it such that by the time we actually settle up, it's, nobody's worse for wear, but I do put more money into a separate reserve above and beyond what I'm paying in estimated taxes to make sure that when we kind of actually work all this out and have enough information about what the tax situation really is, and we know like our full financial picture, that money is there. That money is sitting and waiting for me. And if I have, let's say, $5,000 saved in that account and I only need three, then it feels like a refund because then I can give myself that extra money and be like, oh, yay. Look, I just, whereas normally, writing a check for $3,000 would not be fun because I've already saved five. I feel good about it. So that is kind of a recommended thing to do, especially if you're experiencing periods of business growth. You definitely might want to go that route where you're saving extra. On that point, if you don't have my profit plan worksheet, I want you to grab it. It is free, jamietrull.com/profit plan. Let me see if I have the link right here. I think I do. And this is going to be, here we go. Oh, okay. So you can go to jamietrull.com/profit plan, or you can go to the longer, URL for it. But basically, you're going to be able to, I think that's the right one. I think it is. But basically, this is going to help you figure out what to do with your cash. Once you have that profit, what do you do with it? I have a signature system. You guys have probably heard me talk about it before. If not, there's a video on that site that this is going to take you to where you can watch it and get an idea of what it is. But it's basically saving the, profit. There's two F's. It's saving a piece of your profit for various different things that will help you get closer to your goals. The T in profit plan stands for taxes, which we're talking about here. So how do you save a little bit extra for taxes? This is how I effectively save extra money for that tax, for those extra taxes that I may have to pay so that I can be prepared. Because again, we can talk all day. People really are always interested in how do I save money on taxes? How do I save money on taxes? How do I save money on taxes? And there are ways, and we talk about that, but I also want to talk about how we prepare for taxes. How do we make sure that we have the cash in the bank account? We are less likely to do things, right? We're less likely to make decisions that aren't the smartest for our business when that cash is sitting there and waiting, right? When we get desperate or we don't have the cash, we might start to make decisions that aren't best for our business because we're worried about that cash flow piece. And we never want that to be a concern. So where we can actually be proactive about that, that's what we want to do. Okay, hopefully this was helpful. I'm going to do a quick recap just to make sure, if you missed any part of this, here are kind of the 4 tax tips, the 4 things we don't talk about when it comes to taxes. Number 1, unfortunately, there are no silver bullets. Tax strategy is not overly sexy, especially for small business owners. You're usually going to be getting a tax benefit for basically giving up access or at least short-term access to that money. That's where a lot of tax benefits come from. Not super sexy. There's not some special thing that, us tax professionals just keep and only tell those people who are making a lot of money. It's just that the more money you make, the more avenues you have because you have more disposable cash, right, to be able to put into different places. Number 2, let's see, what was number 2? That tax preparers are not automatically looking for ways to save you taxes. That's oftentimes a separate engagement. If they're just preparing your taxes once a year, they're probably not looking proactively at how you can save taxes next year. They're working on making sure that they get their stuff completed for the current year and do it accurately. Number 3, don't let the tail wag the dog. Decisions about what's best for your business should not be made based on, right? The number 1 consideration should not be the tax impact or the accounting impact. The number 1 consideration should be what's best for your business, and then look at the accounting and tax impact and see if there's what the best way is to structure that. And number 4, let's see, the amount that you're paying in estimated taxes likely is not based on the current year. It's likely going to be based on last year if you've got a preparer who is preparing that, unless they've told you otherwise. So those things are really, really important. Hopefully that recap helps. It looks like it did. It's nice to see you. And yeah, hopefully you got value from this. So go grab the profit plan, jamietrull.com/profit plan. And I will see you. I will be back next week. And then I'm gone for a week because I'm headed to Disney. So I will not see you. And then I'll be back for the end of March. So you'll get to see plenty of me. We're going to be doing more of these. Let me know what you want to hear about and what you want trainings about. Note, we also have trainings on YouTube all the time. So make sure that you like and subscribe to our channel over there, because we have extra content that is just for YouTube. So you'll see even more great stuff over there built for YouTube. They're usually a little shorter than the videos that we have here. So for those who don't have time, that can be a great place to watch me. Plus you can put me on double speed and I talk really, really fast. All right. You guys are awesome and we will talk soon. Bye for now. Oh, wait, hang on. I almost stopped it. Hang on. Oh, there we go. We don't talk about tax. Here we go. I promised. We don't talk about tax. But now it's going to be in everyone's head all day.